January 29th, 2026. Let's see the trades I took today and go over the market. In the market today, we had a pivot point, and this is visually represented by seeing once the market closed, you can see that this momentum histogram bar didn't go up any further. The momentum didn't continue upward. It actually reached what we would call a tipping point. It reached a critical level. It had an event where the opposite forces started emerging, a bunch of selling pressure, and you can see this for more confirmation in this big red volume bar. Now we're going to look at the trades I took. We're going to start. The first trade of the day was INTC, and I took a trade right here towards the middle of the day. And I did this, not the middle of the day, towards the beginning of the day, right when the market was opening. I did this because our 5-minute data was finally giving us permission to take trades to the downside. What do I mean by that? The 5-minute regular hours was already going down. 30-minute and the 2-hour were also giving us support, downward energy, downward momentum. And we had the downward momentum aligned on the 1-minute time frame. But the 5-minute was giving us permission, that's why we took the trade, but it didn't work out. You can obviously tell it immediately reversed in the opposite direction. It was a win, however, because I took profits slightly early. I noticed the price fluctuations were looking like a reversal was occurring and it wasn't going like normal. It wasn't unfolding like normal. So the original price target would have been around here, this first purple line. But I actually took profit early and I took it around this yellow area. The entry was on this candle at the close of this candle. So that actually was technically a loss that would have occurred had I followed the strict profit-taking rules of waiting until this first line is hit. It got close, but it didn't quite touch it. So technically that was a loss. However, it was a win because I took early profits because I noticed the price was starting to fluctuate, and sometimes you can just read the price fluctuations. You can read the price action depending on how fast it moves and in what direction. And I noticed it was just not wanting to go any lower, and it was fighting. I had a weird feeling about it. So I just took early profits. Another factor that told me to take early profits and told me to be risky and cautious is always this 30-minute histogram. I look at the 30-minute histogram and notice we're going up. The histogram, which represents the momentum on a 30-minute time frame, the momentum is building upward momentum, buying pressure. So that's a warning sign. And that also played into my decision making. The next trade I took for today was in Amazon. And right here, we had the 5-minute twins giving us permission to take trades to the downside. On the right side of the middle line and expanding. That's wonderful. An even better sight to see is when we get a power volume bar on the 5-minute. But that's neither here nor there. See, we had some support from the higher time frames. And then on the 1-minute chart, what do we see? We get a power volume confluence. We entered the trade here. As always, we target a rough 2-to-1 ratio. We put our stop loss slightly above that entry candle, and we target a 2-to-1 ratio. We hit that profit target 2 candles later, and then this continued to run well past the final target. And once it did hit this final target, every time it hits a new level, I move my stop loss up to capture those profits. And it's amazing how it can really give you a lot of profit if you let your runners run. So that was a good win right there. Great win. Next trade in the day. Nvidia. The whole market was about to sell off. The whole market was selling off, like NASDAQ and the SPY. But Nvidia was holding on. It wasn't really selling off yet. It was fighting. And again, these dashed lines are the previous levels. So this bold red is pre-market high. The faded red is previous day's high, and then the bold blue is pre-market low, and the faded light blue is yesterday's low. And it's hovering in the middle of this region that you can tell VWAP is playing with it. Okay, it just tried to pass VWAP, and it definitely did not. We're retesting VWAP now, and we get, what do we get? A rejection volume candle. We're on the right side of the momentum. The 5-minute twins are giving us permission to take short trades. We have some confluences in the higher time frames allowing us to give it, a little bit more mental support. These higher time frames don't matter as much, the 30-minute and the 2-hour. But they matter somewhat. It's always nice to have that context because momentum is key. So we entered here at the close of that candle, stop loss slightly above that candle, and all of our profit targets were hit yet again. This is a huge win. Huge win. Normally you sell about 80% of your position right here on this first profit target. Sell 80% of your position. So if you have 100 shares, you're selling 80 shares here. And then you allow the remainder of your position to keep on running for greater and greater profits. And when you capture these wins make up for the losses that you will inevitably experience. Losses are inevitable, and it's part of it, and they're not bad. But you got to remember that if you allow runners to run, it protects you from losses. Think about that for a second. Next trade was in Intel again for the second time of the day, traded it twice. Why? The 5-minute data was giving us permission to take trades to the downside. We also just had a 5-minute power volume confluence right before. We had 2 of them. Look at it. This volume bar is greater than the previous 3. This volume bar is greater than the previous 3. There's a lot of selling happening right now at this current point in time. So what happens here at this entry candle? We are not going with the trade. And this is not giving us permission yet. And then it flips down. And it's a volume confluence at the same time. Wonderful. That's the entry. At the close of the candle, stop loss slightly above that candle, and that was a win. Wonderful win right there. Next trade was in Amazon, which was a loss. And I took a very small position size because I knew I shouldn't have traded it. Like I knew, but I said, you know what? I'm going to trade it, but I'm going to buy 1 share. Literally, I'm going to do 1 share position size. Just because my intuition was telling me not to take the trade. So my intuition was warning me against this trade because of one thing. Yes, we had a volume confluence. Yes, we were sort of on the right side of the momentum here. Yes, the 5-minute was giving us permission. But there's one thing that was telling us not to take the trade. Can you see it? The 30-minute histogram. The 30-minute histogram is telling us we're going up. Okay. Another thing that the reason I fell for this, the reason this was so alluring, as you remember, the bold blue line represents the pre-market low. It's a critical level. Now, at this time, before I entered this trade right here on this yellow line, notice how it was playing rejection, it was about to reject again, but I can't tell the future. But I just noticed how the price was really building up. It was almost like a wedge was occurring. If you can imagine a line here, so now we've got a wedge consolidating with this pre-market. So this could have, absolutely this could have broke through and just completely sold off, which is what I was expecting. But anyway, it didn't. It just consolidated and then it reversed course. And because it was just 1 share, it doesn't matter. It didn't mean anything. Even if I would have won, it wouldn't have meant anything because it was just 1 share. And I did it just because of my intuition was telling me not to take the trade. But I really wanted to take the trade because of, childish impatience, wanted to do it for the thrill of it. So anyway, I scaled down. It was a loss, and it didn't matter because I scaled down, because I followed my intuition. Final trade of the day was the last 10 minutes of the day. The most exciting time, except for the first 10 minutes. The last 10 minutes are always the most exciting. Before I entered the trade at the close of this candle here, as you can tell, because there's a yellow line. But why did I do that? The 5-minute data, the 30-minute histogram were giving permission. So when that candle finished, which was reversing the momentum, look, the momentum is losing, we're going against the trade. Why would we take longs right now? That's foolish. Boom. So as this occurred, not only is this the first minute of the final 10 minutes, but man, we already had permission stacked up on the 5 and the 30-minute. So I took the trade, entered at the close of the candle right here, stop loss slightly below that candle. Sell the majority of the position at this first target. Good win. With all that being said, I will see you in the next one. Take care.